Let's talk about the other two stocks that you've pointed out to avoid. And I want to talk about KRE. This is an ETF for the regional banking sector because, yes, we have seen just the volatility there. It feels like there's starting to be a bit of a differentiation between the regional banks. Is it your sense here that we've hit the bottom, or do you think there's still more cracks to come when you're looking at some of the other names in the space?
I think there are more cracks to come. The reason I picked out KRE and that's selective, let's say, banks, is that, if you wake up one morning like PacWest or some others and they're down, 10%, you go to CRE, next thing they're down 6%. They go down in sympathy. So I just think there's better other opportunities. As I mentioned, AI is all the rage for all the reasons. There's other pockets of strength, semiconductors, of course. So to be in this space, regionals, you're going to have to have strong stuff. And it's really hard to pick through what's going to make out the other side, which ones are in trouble. But every time there's a problem with just one of them, it comes back and hurts the regional. I think you said earlier, for the week, Free had a good week, but you saw it close at the low of the day. And I think still there could be a couple of ones out there, and they always take it out in this ETF, it seems.
Ken, the other pick that you suggest that people avoid is Anheuser-Busch. We know that a lot of people have been closely watching the sales of Bud Light, given the controversy and what has happened over the last several weeks. Do you think there's more downside risk ahead, it sounds like?
Yeah, it could bounce a little bit. I mean, it's gone down so hard. I mean, it was in a high 60 before the controversy started. Below 60, I think it landed sub 60. It could bounce a little bit. It could be a short there. The sales numbers are pretty amazing. 20-something percent week over week. I didn't know it was going to be so sticky, but it is very sticky. And it looks very tempting. Say, hey, the stock was 70, and because of controversy, that will blow over. I'm not so sure it's going to blow over that quickly. It still remains sticky, and therefore we would avoid that stock.